Good morning, good morning. Good morning, good morning. How's everyone doing out there today? So we're going to have some fun. We're going to go through how I analyze order flow using Bookmap. And I think that'll be pretty helpful. I know there's been questions about, how is this useful for my trading process? How do I use it for intraday order flow analysis? And I want to dive into that a little bit more. And I'm just getting everything all set up here, so just bear with me a moment. And folks, happy Tuesday to you. It is a momentous occasion. It is Taco Tuesday to those who celebrate. So we're going to get right into it here. So first, let's talk about the disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered investment recommendations or advice. Trading futures, equities, and digital currencies involves substantial risk and is not suitable for all investors. So with that in mind, the main takeaway is be careful with your capital. Let's talk a little bit about me. My trading journey began in 2005. I funded my own account and began trading stocks, and I moved on to options, futures, commodities, and Forex as I expanded my horizons. In 2006, I started rolling my trading profits into long-term investments. I navigated through the great financial crisis. It really started in late 2007 to early 2008, which helped me to better appreciate the importance of understanding intermarket dynamics, momentum, and macro, particularly the convergences where they all meet. I managed to get out of the way of the great financial crisis for the most part, but it was mostly luck and a focus on technical analysis that had me cautious. My approach now is systematic, driven by momentum, price action, options flows, sentiment, positioning, volume profile, and the big picture. I backtest and I build my own models and systems to trade a variety of asset classes. I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data. And I co-founded TraderAid in 2022 and Macrovisor in 2023 to share my experience, ideas on market opportunities, and education. I've also built a number of unique tools and models, and I provide one-on-one coaching. So for folks out there that don't know, you can get up to 40% off of Bookmap plans at TraderAid.com/bookmap. Simply scroll down to the specials. And if you're not a TraderAid customer yet, I encourage you to consider signing up. You can get up to 20% off TraderAid plans using the code Mayhem20 at checkout. And for all those that want a little bit more hands-on help with Bookmap, I'm running a special right now, 20% off your first coaching session using the code COACHMAP. You can visit TraderAid.com/mayhem to sign up for coaching. And folks, it's important to take note that the best experience can be achieved by joining us on the Bookmap Discord. That's at discord.com/invite/bookmap, or you can use the QR code on screen, whatever you prefer. So to recap, we're going to talk about order flow and Bookmap. I'm going to go through how to use the program a little bit more, especially for shorter term trades. And in today's session, we're going to focus on the futures market. So here we are in Bookmap on screen. If anyone has any issues seeing my screen, please do let me know, but everything should be good to go here. And if folks have any concerns or questions signing up to Discord, let us know. We are, of course, happy to help and make sure your experience is a good one. So on screen, we have the S&P 500. We are looking at it through the lens of the September futures contract using rhythmic data. And I tend to prefer rhythmic data because it just gives you the best flexibility of what tools you can use with it. So I do like the stops and icebergs quite a bit. There's also the ability to place orders through rhythmic directly if you want. And Bookmap does have a panel where you can actually manage those trades. They even have a multi-bracket order system, which is pretty cool. Like you can place an order and have essentially stops and limit orders bracketed up at different levels, and you can even scale in and out almost automatically. So that's another thing that's kind of cool that I started playing with a little bit more recently. So on screen, we have the heat map. I have this pretty well customized to really make larger levels of liquidity stand out. You'll also notice we do still have that band of liquidity above and below us. It seems to be pretty well established until about 4:15, 4:20 p.m. Eastern every day after the market closes, and then it sort of disappears for a bit. That band of liquidity used to only really be seen around contract rolls, but now it's become, well, more of a phenomenon. But we can still look at other areas of interest defined by liquidity levels. Like, for example, this 5620 level, 238 contracts on offer above us. That is interesting. And if we continue this sort of uptrend that we've been in, that could be a bit of a magnet level for the market to explore. Looking at just technical analysis, zooming out to broader charts, I am looking for upside up to about 5631.75 on ES. That's where I think the initial weekly uptrend could potentially hit. But I do recognize we've got some big tech earnings tonight. We've got Google or Alphabet, and we've got Tesla as well. So that could change market sentiment for better or worse, depending on what those reports look like after the close. And in today's trading calendar, we do have existing home sales coming up at 10 a.m. We also have a 2-year note auction coming up at 1 p.m. So those will be your big event volatility catalysts on the day. We're coming in with the market somewhat bid overnight. It was looking quite a bit better earlier. Then we had a limit seller come in and kind of scare some folks away. You can see that passive iceberging up here wasn't a whole lot, but there was, basically over 300 contracts sold. Some of that selling started around 56.10. We saw some pressure. We've come back up from there, and we've actually filled those offers completely. But nevertheless, that was one of the areas where we started to see some pressure. But you can see overnight from the European session, we've actually been pretty well bid here. And we did see at the lows, a passive buyer came in and kind of put in those lows with 142 contracts on an iceberg buy. Now, that matters to me. I really do like watching the icebergs and the stops, but I find it very helpful to customize your settings. So if you're using icebergs and stops on your chart, here's a sense of how I do it. So I look at a standard deviation interval of 30 minutes and a standard deviation multiplier of 10. That might seem extreme, because it is. I'm only really looking for the extremes. That's actually one of the ways I sort of optimize my chart. I also find there's more actionable information in those extremes. My goal when I'm looking at my charts is not to spend too much time figuring out what the screen is showing me. The other thing that I do with my stops on the main chart is I only show stop runs. I also get rid of the filtered icons. Now, for me, this helps because I have a very clean presentation where the only time I'm really seeing stops and icebergs is when they're meaningful, right? So this is a pretty important part of how I optimize my screen, and I do that across a number of the different settings that I use. Similarly, only really looking for extremes to find areas that may be potential turning points intraday. Now you'll notice I do show the liquidity above and below spot. And the reason I do that, and this is with another plugin, this plugin is called Outside Liquidity, right? And this is my configuration for it if you want to set it up similarly on your end. What I'm doing with this is I'm showing order book depth. And the reason I'm showing order book depth is it helps me to qualify just how liquid we are, right? And that gets me basically a sense of what to expect in terms of realized volatility. An order book that has, what it has right now is 47,000 order book depth. That's not very deep. Now, obviously, the market hasn't started trading yet. I would hope that we approach or get over 60,000 order book depth within the first 15 to 20 minutes of trading. But if we're below 60,000, I consider that to be a less liquid trading day. If we're below 50,000, I consider that to be quite illiquid. And so I have to adjust my position size to be smaller and my stops to be wider in those less liquid environments, because the probabilities of getting kind of run out of a position from whipsaws and you know, basically more volatility is greater. And it's simple, really. If you think about it, if there's not much order book depth, then it takes less volume to move price. So that's something to take into consideration as we're kind of mapping out how we're going to trade the market. You know, let's approach it first with, well, what kind of order book depth do we have after that 20-minute opening range? Because then we'll have a sense as to where our real range is, if we're going to break out of it and build some acceptance, and then how much of a position to put on and how to kind of map our stop out, right? And I like to map the stop out based on the size of the opening range, but also based on order book liquidity. That gives me a better sense as to how to manage my risk, because on the other side of it, that opening range will also give me a sense as to what size of extensions I might expect. And I want to make sure that reward makes sense. And I also want to make sure I'm not taking too much risk. Like, I really feel like it has to be at least 2-to-1 reward to risk for me to be interested in taking a trade. Otherwise, I'll pass and I'll wait for the next opportunity. Now, I'm not a very high frequency day trader. I'm much more selective about my engagement. There are some days where I will not day trade because I don't see opportunities that suit my style. I also have the point of control and VWAP on screen. I use these to also give me a sense as to who's dominating the market, buyers or sellers. So pretty easy, quick glance. If you're above VWAP and the point of control, and this is session VWAP and session point of control, then buyers are in control. If you're below both, then sellers are in control. And if you're in the middle, you're still in sort of a decision zone where neither side necessarily has a distinct advantage. The delta bubbles on screen are a really helpful part of Bookmap. And what I like to do and the default configuration is pretty similar to this, but essentially I like to size them down a little bit, right? I use the 3D bubbles and I use the volume delta on them. Okay. And then I just essentially, I'm looking at these to get a sense as to where the aggression is coming from, if there's any at all. So if you see larger red bubbles, for example, that's more seller aggression. Those are sellers dominating the tape. And the larger they are, the more aggression you're seeing, just like vice versa with green. Those larger bubbles show you that buyers are being more aggressive and dominating the tape. So right at a glance, you can have a sense as to where the pressure may exist in the market. And I find that to be particularly helpful, and especially we can add it to other areas of convergence that you may be seeing. You'll also note we have the COB. This is the current order book. I do tend to get a fair amount of questions on what COB and SVP are. So I want to go over these really quickly for folks that are looking at these and wondering what's the difference. The current order book is all of the resting liquidity on the book. Everything above the current price is an offer. Everything below the current price is a bid, and hence the color coding. So that's where there's interest in the present. Now, the session volume profile shows where interest was expressed through transactions in the past during the current session. So that's why you'll see that there's a completely different configuration here, because this is where there was actual transactional activity and it is sorted by delta. Now you can set up your session volume profile in a number of different ways. This is how I have mine set up, right? And the reason that I'm doing it this way is it just is easier for me to read, and I'd rather see it in a delta. I'd also like orienting it so sort of the session volume profile is left justified, the current order book is right justified, and they kind of meet in the middle. To me, it's just easier to read it. Obviously, do what works best for you. But at a glance, you can see there's some buyer aggression here right around the point of control in that session volume profile as well. So it just adds a little bit of weight to just how key that level ends up being pre-market. Now, once we get into the cash session, we put a lot of this behind us. We'll still pay attention to the European auction and the Asian auction, but we'll focus on the US auction and the sort of price action and interest that's shown there. To the right of the session volume profile, I have my options visualizer. This is a tool that I built that shows the areas of options positioning and flows that are happening in SPX converted to ES levels. And I find this to be sort of like having some cheat codes, essentially. You just get a sense as to where some of the larger flows are happening. Futures across all major equity indices in the US trade about 450 billion of notional a day. Options in SPX alone trade about 1.2 trillion of notional a day, with most of that expiring in a week or less. So it's an important area to monitor. On the subchart here, I have this sort of historic measures. I'm keeping track of a couple of different things. One of them you don't see on screen, I'm going to pull it in here, is the ES aggression. This is the volume pressure market pulse indicator, and I've customized it somewhat to only really focus on higher levels of aggression, right? So that means that it's only going to put out an audio alert if there is over 90% imbalance of buys or basically 90% imbalance of sells, or what is called negative 90% on that chart. And that'll show with these extremes, right? Like this darker red print. You'll also see a darker green print towards the top of the range. Usually those types of extremes are areas to watch for potential turning points if you see other convergences, like for example, some level of exhaustion expressed by a massive stop out combined with a aggression extreme on the sell side. Sometimes you can see a reversal from there. Obviously, I wait for price action to show me that buyers are starting to get interested and they're seeing the same thing. But these are some of those early indicators that you can watch, especially if you're short and say, boy, I don't necessarily want to be short into something that exhaustive. Maybe I'll cover here and look for an opportunity to get long on a reversal. So that's shown in this subchart line that goes from light green to dark green and light red to dark red. I also have icebergs and stops. They're color-coded green and red on the bottom. And they can be interesting, especially when you see big runs, like when you see them going in the opposite directions. So, for example, let's say you see an exhaustive stop run to the sell side, and on the other side of that, you see iceberg buying, right? So maybe like 1,000 contracts get stopped out, and maybe 2,000 contracts get bought by passive buyers. That's another thing I look for on the subchart and the main chart to see ahead of a potential reversal in price action. So that's something that I think is really important to watch. It's one of the reasons I like to use Rhythmic for my data for the S&P futures. Then I have the cumulative volume delta, and this is throughout the session. So it resets at 9:30 a.m. and it's showing you, in aggregate buys versus sells and sort of who's in control, right? So that line is either green or purple, green for a positive delta, purple for a negative delta. And it's another one I don't use in isolation, but I find it to be quite helpful. For example, let's say that delta is really, really positive, but we see icebergs net negative and you see them layering in, you're seeing some absorption of those buyers there. And that can be helpful to potentially see a turning point coming in as well, or at least a bit of a ceiling to a move. So Eugene asks in the YouTube chat, may I go over the options visualizer? So yeah, this is a data feed that I built. It's not related to Spot Gamma. It is actually an algorithm that I built in Python that scrapes about 10,000 options on the chain from the S&P 500 on CBOE, and updates it about every minute throughout the trading day and displays that in that rightmost column. And so that's really, it's a unique feature. The other one I think that Spot Gamma made doesn't have the real-time flows, and it only updates once a day, I believe, in the evening. I'm not 100% sure, but yeah, mine is quite a bit different than that. And it's really only available when I'm doing educational streams on the TraderAid Discord right now. But it is quite helpful, I think, to figure out how options are influencing the underlying market. So let me know if that's helpful. And folks, if you have any questions, please do let me know. Tag me in if we're on the Discord so I can be sure to see that. You know, I haven't been keeping track of the Ethereum ETFs, but if someone in the chat room knows, certainly would be curious. So we're going to look around the market to some of these other areas. Pre-market, we see the NASDAQ trading up above VWAP and its point of control here. And we can see there is some interest above, some liquidity building above. You know, we'll see what these levels look like when the market opens, but because this is such a small contract, there's only 6,500 order book depth on it. Even 80 to 100 on the bid or offer is noteworthy on the NASDAQ. But again, we'll see what this looks like pre-market, both in terms of order book depth and liquidity. We're just about 6 minutes away from the market open here. Got a market on open imbalance, about 23.1 million on S&P to the buy side. Yeah, so these are gamma exposure levels, and gamma 1 through 5 on ES here are the gamma exposure levels in order of magnitude, right? Then we have key levels as well. Those are net gamma exposure. So, you know, key above are going to be calls. These are really large levels of call positioning at what translates to SPX 5700 and 5750. And so gamma, they tend to be a little bit more magnetic. Price tends to get stuck at those levels. They can also act a bit more like support or resistance depending on whether you're above or below. And then those key levels tend to be more just direct support or resistance rather than magnetic. So that's how I look at those. The call wall is the largest key level of calls. So that's the largest level of call interest above spot. And that's going to be implied around 56.36 ES. And that's pretty close to my upside target for the week. My upside target for the week right now is 56.3175. But obviously earnings can have a decent impact on that. And then in terms of like mapping out GEX levels, I mean, I wrote a bot that all it does is track that for 0 DTEs and full chain options on S&P and almost any other optionable security, whether it's a stock or ETF. That's exclusively on our Discord. So not really related to Bookmap, but you know, if that's your interest, is really exploring GEX. I've been building tools specifically for that for about 2 years now, and I plan to continue to build a whole lot more. We're just getting started in that department in terms of tools for options in general. Let's take a look at rates here pre-market and really zoom this out to the European session. You can see there's a bit of a bid there. That brings us out to rates coming down just a little bit. on the long end. We do have a 2-year note auction today at 1 p.m. That will be important. It'll give us a better sense as to whether this big drop in rates we've seen has legs, right? It's all about the expectations for the Fed. And you do see some of that passive absorption of buying. You can see that in ZN here. And you can actually see the iceberg order overhead that was a part of that. So this is another thing that would give you a sense that leading up to this move going down, there are already signs, right, in this divergence between the cumulative volume delta and the icebergs that maybe, just maybe, those buyers were getting absorbed, right? You can kind of see it a little bit more closely here. And I would say around just after 9 a.m., that was sort of a clue that things were getting a little bit more lopsided. And sellers on the passive side stepped in and continued to iceberg the 10-year note futures, and that kind of put in an interim top. So that's the other reason I like to watch CVD versus icebergs. So I've been asked if I am bullish on Ethereum today. I mean, the technicals don't look terrible. The whole crypto complex came off those lows with a nice head fake look below reversal. So overall, you know, crypto is coming in with path of least resistance largely being higher. I focus more on Bitcoin than Ethereum, and I see Bitcoin potentially getting up to about 71,450. That's sort of the top of this range it's been trading in. And if it's going to sort of have that same kind of look, then I would think that Ethereum would also start to push closer to the top of its trading range. Now, if we zoom out, we can see this has been a choppy session for Bitcoin. We're back at close to the lows of that session. From the European Open, we did have a little bit of a bid. We got bid up about $900, but you know, so far now we're coming back lower. So, you know, just the pre-market action doesn't have me too bulled up on crypto, but the longer term chart, maybe there's some opportunity for swings. But I'll tell you how I trade this. I'm more of a momentum driven trader. So what I'd be looking for to get more bullish on crypto would be a break above these recent highs, right? That would tell me that we're likely to clear out some of the shorts, that we're likely to get more long speculators involved on that momentum breakout. And I think that would give us room to extend the rally quite a bit. So until then, I kind of feel like we're in a bit of a ping pong range, if that makes sense. And I wouldn't necessarily be too bullish on that in the near term, but we'll see if the ETF, you know, really starts to invite a lot of institutional and retail flow into Ethereum. If it does, then perhaps that ends up being a bit more of a catalyst. And could I use any of this information for day trading? Sure. Yeah. I mean, that's why I built the SPX options visualizer, was, you know, both for day and swing trading timeframes. It's also why I built a lot of the GEX and options tools on our Discord, where for day and swing trading timeframes. So we have the 0 DTE tools and the full chain tools. Obviously for stocks and some of the ETFs, the 0 DTE tools only work on Fridays, but for everything that has a daily expiry, you know, those 0 DTE tools work every day, and the full chain tools obviously work every trading day. So it's helpful to map out areas that can be of interest to the market, that can be somewhat magnetic or can provide support and resistance that may not otherwise appear in a price chart. So market is opening now. We do see some changes to liquidity. I think the open is pretty important to watch here, particularly if we see liquidity build up, which is what I'd like to see. I'd like to see the order book thicken up to well above 50. I'd love to see 55 to 60K order book depth. We can also see the top and bottom of this red and green bracket here. This is the price high and price low. It reset at the session start, as you can see. So it helps us to define the opening range. I like to look at this over a 20-minute time frame, and that way I can have a sense just by very quickly glancing at my screen if we're breaking out or breaking below that opening range, and also then later on in the trading day if we're making new highs and new lows on the session. Now we do have a bit of a magnet level not too far below us. That is going to be that 5550 SPX level. It's a pretty large level of options interest, and it may pull price a bit lower, particularly if we start to move below VWAP. We could kind of get stuck there for a bit. I do believe that area will provide some support, at least during the regular trading hours today. But I think it's also an important level to keep our eyes on. We are sort of post-OPEX. We don't have nearly the same amount of supportive flows earlier in the day. Buybacks are temporarily on pause for a lot of the S&P. I think it's about 94% at this point. The options decay flows from Vanna and Charm, or the Delta and Theta decay flows, are also on pause post-OPEX. And some of the buying flows that we may have otherwise seen from systematic managers are also somewhat on pause, as they're pretty close to full port long, essentially. So that may diminish upside without exogenous catalysts. And those catalysts, really, it's all about earnings season. I mean, at this point, I think that's going to be the big decider. It may even be one of the reasons that CME raised margins on futures contracts, because we're going into an earnings season that's already set up with record high expectations. So people are very, very bullish on where earnings growth could go for tech. And at the same time, tech has never been more concentrated as a component in ES or NQ. So if I was, essentially a clearinghouse like CME, I'd say, boy, it looks like we're going into a period of potentially higher volatility. So we should probably raise our margins a bit to account for that. Especially given how concentrated positioning is, both in big tech and in futures. We've seen some degrossing by hedge funds, but they're still, they still have a lot of exposure to their favorite longs in the NASDAQ and some of their favorite shorts like the Russell 2000 and some of these single stocks that have been squeezed higher. So we see right now on the S&P, we've got both open buy and sell icebergs. Up above with that red diamond is a sell iceberg right around 57.08. And then we have a buy iceberg just below right around 56.0350. It's always interesting to watch these, particularly to see how much demand and supply may exist at these levels. Let's take a look at the NASDAQ as well, as it tends to be a bit more of a momentum leader, often pulling the market one way or the other. And we can see it showing some relative strength versus the S&P. Also of interest is there is more buying aggression being shown in the NASDAQ with those larger buy-side delta bubbles. And we do see some stops. These are forced buy stops from shorts. Those were blown out in a stop run. Now we see a passive seller coming in, about 15 contracts sold here. Let's move over to the Russell, where there's all sorts of talk of rotation, but I'm not so sure we saw an actual rotation in the small caps. More record call buying, a fair amount of short covering, and some sympathy with rates going down on the long end. So I'd be a little more concerned about small caps here. I don't think we saw a rotation. I think it was more degrossing and speculation. And that's just my informed speculation based on the data. We'll take a look at our favorite shiny metal, gold. Gold has had a bit of a reversal off of recent all-time highs. I don't like the head fake look above fail any more than I like the head fake look below fail. If I was long gold into that, I would be concerned in closing out those longs. And just like with something that's a head fake look below and reverse higher, if I was short Bitcoin into that head fake look below and reverse higher, I'd want to cover that short there as well. Often when you see those, you kind of think about, what does that mean for positioning? What does that mean for participants? Well, if you have one of those events play out, you've got everyone that was, for example, long gold into that breakout now becoming motivated sellers as they're increasingly offside. So that's why I get a little bit more skittish. It makes more downside price action likely, and we saw some follow through in gold, and now we're back in that big consolidation range, right? So for gold, I'm cautious here. I'm not very excited about it unless it either breaks above or below that defined trading range that I've discussed in the past. Let's take a look at Bitcoin here. Bitcoin getting a bit of a pop. Let's zoom it in. I can just use the time slice function to show the last 30 minutes of trading. I can see we got a sell into the open, but now we're seeing some higher conviction buying, pushing us above the point of control and testing VWAP here. And now retesting that point of control. But overall, seeing just a little bit of interest coming back into crypto. And we'll come back to the S&P. We can see that upside iceberg sell has been removed, but there is still a downside iceberg buy. So we're seeing the sort of clouds open up just a little bit more for S&P here. And we do see liquidity building, interest building above where yesterday's most active call was being transacted. So that tends to be more constructive to see those bits of liquidity building above. That's a sign, in essence, that if you look at this as a three-way auction, there's interest in higher prices. We have a less than liquid order book, so liquidity is going to often travel to where there's interest. And so that's where I'd be looking at this, particularly if we can start to build above this point of control and then make a breakout from the opening range. And we do still see that call wall up there. Now, these options levels will be updated within about the next 10 to 12 minutes as we have sufficient volume of trading at CBOE to start showing those new flows and positioning changes as they happen. That data is updated about once every minute during regular trading hours. And overall, you know, just on a very, very short term sort of microstructure look, it does look like we're trying to put in a higher low here and start to push into an uptrend in the the regular trading hours session. I'll be watching this pretty closely. I still do want to see a breakout from the 20-minute opening range and building at some acceptance on that. But overall, if you're just scalping this on a very short time frame, it's starting to look more constructive. We are above VWAP. We're above the point of control. That overhead supply is diminished from that offer that's no longer there from that iceberg seller. And we have some supply building up ahead, but it's looking more constructive. Nothing more. It's not really a death cloud look to me here. It looks more a bit magnetic up to about 56.25. We also have some other items that could be seen as market positives. We do see a bit of a reprieve in interest rates, particularly the long end coming down. We have oil coming down as well, which suggests that rates could come down farther. And we are starting to push towards new highs with a decent amount of buyer aggression. This is taking us right to where our naive model calculates that gamma flip level. Now, one thing to keep in mind about that is when you look at statistical probabilities, when you backtest being in negative versus positive gamma territory, there are some differences in the regime. In negative gamma territory, you're more likely to see downside and you're more likely to see elevated realized volatility. Dealer hedging patterns change to some degree, where they're more likely to sell dips and buy rips, right? So you can see how that might add to vol. When you get above that gamma flip level, the further into positive gamma territory we get, the market tends to become more constructive. You tend to see more positive price action in positive gamma territory, but you also tend to see more diminished realized volatility as dealer hedging flows shift to be buying dips and selling rips, in essence compressing volatility. We do see a passive seller stepping in now again. Looks like they got their fill. Wasn't much above us. that passive buyer has been more aggressive. They bought about 331 contracts and 2 orders just below price here, and there's still an open order down here around 5603. Let's take a look at the NASDAQ, which gave us a clue earlier. We saw the relative strength in the NASDAQ versus the S&P, and the NASDAQ has been regularly setting new highs. It's well above the point of control in VWAP. So again, the NASDAQ has been the momentum leader. It is the index to watch, and it is leading the S&P once again. Coming up in about 18 minutes, we get existing homes. That sale change expected to come in at negative 3.04% versus a prior reading of negative 0.7%. I don't think that'll be a very big event volatility catalyst, but it's still worth watching for large deviations. I think the bigger event volatility catalyst will be that 2-year note auction today. The prior bid to cover was 2.75, so I'd be looking for better than that to show that there's still interest in the shorter end of the yield curve. And remember, if I was out there and I had to make a choice as to where to buy debt, I'd much rather buy bills and short-dated notes than, you know, the longer-dated notes like the 10s or the bonds like the 20s or 30s. You're getting a better yield, you have less duration, so there's less risk. It just makes more sense. So I could see there being decent appetite in the 2s, maybe the 5s. I'll be interested to see how the 7s go. But we're kind of auctioning off the belly of the curve this week with the 5s and 7s, and the demand there will be very interesting to watch. And it could have an impact on markets, particularly the Russell, which is right now the most negatively correlated with interest rates on the 10s that it's been in really, I think, over a decade. Much less about earnings and economic data for the Russell than it is interest rates and degrossing and speculative flows. And so far, our opening range today, not terrible, about a 12 handle opening range. I'd love to see some expansion on there just to give us the potential for a more exciting trading day, but we will take the market we're given. And I like to look at the 20-minute opening range. We've got about 6 minutes left on that, so we'll be paying attention to see what it tells us. We do see some of that liquidity overhead continuing to build at 56.25 as well, which could become more magnetic as we approach it. Price is certainly moving in the right direction. The order book, however, is not as liquid as I would hope. Only 49,000 order book depth, which does imply elevated potential for realized volatility. And we are seeing some upward pressure, some more buying pressure in the S&P. A little bit of aggression on the ES aggression indicator. That's based on the Bookmap Market Pulse volume pressure indicator. And we did see 354 contracts stopped out to the buy side. So those were shorts getting pushed out of those trades. We are making new highs here. We're pushing above the gamma level and into this large area of offered ES contracts. And interestingly enough, the Russell is not faring so well today. Even though we're seeing some pressure downwards on rates, so far Russell's not really having a great day. Down just about 0.5%. So I really, again, I'm quite skeptical of the rotation into small caps. I just don't think that's what we were seeing. I think it was short covering. I think it was speculation as evidenced by record amounts of call buying. That doesn't mean that there may not be opportunities in the small caps at some point. And if there were to be, I'd be more excited about the value side of the equation in the S&P small caps rather than the Russell and its entire index of 2,000 companies, many of which don't make any money and some of which are very sensitive to interest rates. Let's take a look at gold here as well. Gold just sort of chopping along. From the European session, though, it's had a decent bid, but it's starting to look heavy here. As gold starts to push below VWAP, I would favor fading gold, and I'd be looking at about 23.92 as a level that we could push down to. So right now, gold's starting to look precarious. It is in this giant trading range with some heaviness to it. The way it had that head fake look above reversal suggests prices could come down. And I'm looking at the volume profile on a longer term gold chart and looking at around 2330 to 2340 as to where prices could be pulled down to on an interim term basis as we consolidate. Let's look back to the NASDAQ. NASDAQ pulling back a little bit here. We also saw quite a large stop run in the NASDAQ. Again, it's all about relative size. 206 with an order book of just over 7,000 is a big stop out in the NASDAQ. So that was somewhat exhaustive. And we are seeing price pull back here. Not quite as much as a pullback on the NASDAQ. We're not quite seeing that here in the S&P of yet. But with the NASDAQ being the sort of momentum leader that it has been, we'll be watching carefully there. Still seeing that pressure on the NASDAQ as well. And buyers coming right back into the NASDAQ here to bid it up even before we get down to that point of control level. S&P never really had the same level of pullback, but it did get back to its point of control, which has been pulled higher by buyers, which tends to be bullish. And we're now starting to resume that move higher from there. We're just about a minute away from forming that 20-minute opening range, which is, again, it's not anything to write home about, but it's getting better, right? It's about 15 handle opening range, which is decent for the kind of summer doldrums markets we've been trading. And we're seeing that push higher to new intraday highs in the S&P 500 futures. That's also expanding our opening range a bit. So got about a 16 handle opening range now. So that's, that's interesting. Certainly gives us some room to move higher if we can break out of that opening range. I think that resting liquidity above us and even potentially what is now the second most active call strike and where that wall of calls was previously, that could be a reasonable near-term target on an opening range breakout to the upside. So that'd be about 56.36 on ES. It's a little higher than what my weekly level was. I was looking for 56.31.75. I think that could still provide some resistance here, but with a larger opening range and a decent amount of upside pressure, we do have some room higher here. Google's bid up modestly ahead of earnings, up about 0.5%. Tesla's bid up, let's see. Oh, I'm sorry, it's down about 0.5%. It was up earlier. It's just how it trades. And we've had two of those relatively large stop outs on S&P. Pretty much each time we're making one of these new highs, you get more and more of these folks that were betting against upside momentum getting stopped out. At the same time, you see liquidity building above. So that does look constructive overall. Looks like we're set to potentially test or retest this point of control here at 56.15, just above the gamma flip level. And we have built our opening range, so we do have that under our belt. Looks like it's about 21 to the upside and 3 to the downside, so about an 18 handle opening range. So at this point, what I'd be looking for is a break above or break below the opening range, some acceptance built in either scenario to give us a sense as to whether we're going to have a trend day. If we do, the probabilities of continuation are quite high, and that's the type of momentum-driven trading setup I really like to trade. Because A, it's kind of a set-it-and-forget-it trade. You put in your brackets, and you go and do something else. You don't need to watch every tick on a trade like that. And we did have a decent size sell stop there, 353 contracts. Let's take a look at the NASDAQ here, see how it's doing. It's actually making a new low here from its, not on the session per se, but from this earlier low at 48. So that is something to keep an eye on. We do see some gradual iceberging in on that pressure. Russell's starting to look a little bit more constructive after that downside earlier, and you have a passive buyer just below price. And not a lot of action in the rates market here after we had that large iceberg sell, just sort of consolidating. Bitcoin moving lower here, and there is a decent resting bid at 66,000. Shifting back to the NASDAQ, retesting that recent low and actually moving a bit lower than that. We do see some buy appetite coming in here. 9 contracts iceberg to the buy side so far on NQ on this pullback. And now that passive buyer seems to have stepped aside. Let's take a look at ES. ES also kind of starting to make a lower low here. And we do have data coming up in just about 5 minutes, existing home sales. We'll also get Eurozone consumer confidence. Although I don't think that'll be a big mover for U.S. markets, it could affect the euro-dollar exchange rate, which could have second-order intermarket dynamic impacts on U.S. markets. UPS continues to sink after its worse-than-expected earnings. It's down 11.65%. Operating margins in the U.S. shrunk significantly, and revenue came down. That's a bit of a worry for investors here, despite management making reassuring sounds that from here, operating margins will be growing. CrowdStrike's getting a bid. It's up just about 2.25% to 269.89. I think the selling may have gotten a little ahead of itself on that one. We do see another passive buyer coming into S&P futures here just below the point of control, pushing us above that level on that 84 contract buy with that order still open, moving us above the gamma flip level. Isn't it interesting to see the point of control just around that gamma flip level as well? Kind of illustrates its importance, but also gives us an area of convergence where we can assign additional confidence to the importance of crossing above that level. And we don't see quite as much that band of liquidity on S&P. It doesn't really seem to be the same phenomenon that it was earlier. It's largely gone. Perhaps it's a sign of things to come. If so, it'd be a welcome change. I mean, granted, you can filter that out. There are tools in Bookmap that you can use, like TradeMap, but I'd rather kind of see everything that's on the book. And seeing that it's no longer there, at least for now, knock on head in place of wood, hopefully that's a sign of things to come. But overall, you know, things do look constructive, but for me to be wanting to get involved with S&P long, I do want to see about a 3 to 4 handle move above this opening range, some acceptance built, which just basically looks like some consolidation, transacting decent volume up there, right? And then I would start to add to a position, opening a new long position on that move should it happen. And then if we backtest that opening range high and start to move higher again, I'd go to a full position, right? And I'd set my stop just below the top of that opening range by about 3 handles on a day like this, maybe 3.5 given the less than liquid order book. And I'd be targeting at least half the opening range as an extension to the upside. So 18 handles would give me 9 points. You know, if I'm letting it drift up 3 or 4 handles, maybe that'll give me closer to 6. So if I'm taking 3 points of risk for 6 points of reward, it's still about 2 to 1. That's kind of how I would look at it, but I'd also be paying very careful attention. Now we can see the most active call strike is at 56.36, so probabilities are we could actually have a larger extension higher to that hot call. And that is with an asterisk because it's telling you this is the most active options on the entire chain. And also there's more calls transacting than puts. And we can see that when we zoom out and view the totals. So we'll see if options exert that magnetic impact of pulling price towards them as they often do. And less than a minute away from data. Also less than a minute away from my stream ending. I hope everyone has enjoyed this overview of how I use Bookmap to analyze order flow. Of course, if you want to pick up a copy of Bookmap for yourself, you can do so at TraderAid.com/bookmap. Scroll down to the specials to get up to 40% off. If you're interested in signing up to TraderAid, if you're a new client, visit our website, TraderAid.com. You can use the code Mayhem20 at checkout for 20% off your first month or quarter. And if you want more one-on-one help learning about how Bookmap works, you can book a coaching session with me. You get 20% off that first session using the code COACHMAP at checkout. Just visit TraderAid.com/mayhem to sign up. And folks, I appreciate you all tuning in. I will be back next week, Tuesday at 9 a.m. Eastern for another edition of Back to the Futures with me, Markets and Mayhem. We did get existing home sales in. The actual number was 3.89 million versus a forecast of 3.99 million. The prior reading was 4.11 million. So we are seeing some slowdown. And oh no, looks like the algo brackets are back. It's like they heard me and they decided to come back in. And now they're disappearing again. And now they're back. Thanks everyone for tuning in. We haven't yet had that breakout of the opening range to the upside. I'm still somewhat constructive on this overall, this price action, but I do want to see that move higher to validate my view of where we could go from here, which would
Balance
essentially be 56.3175 for my core and 56.36 for my runners, should we get that opening range breakout to the upside that's confirmed. Thanks for tuning in, everyone. I'll catch you soon.